Welcome to an overview of the FX Scripts Sigma reversal trading system built exclusively for TradingView. This session is an overview of each of the indicators, plus how they work, how the system works. So it's going to take a few minutes, but hopefully you've got time and settle in and enjoy. Okay, first things first. Just looking at the price, the candles up here, we can see this Sigma 4-in-1 is producing all of these various lines. I'll talk you through what each of them are. So these solid, deep pink lines, hot pink, they are liquidity levels that have been drawn on automatically by the tool. What we're looking for is when these coincide, when one of these is broken and coincides with a reversal. So you can see that happens quite nicely here. We've got the daily liquidity. It's broken. We've got a reversal print forming at the same time. Now, that by itself is not enough to enter. What we now need to do is look further down below, and we're looking for a divergence. This is the power delta tool, and this is the manipulation ribbon. So my personal preference is for a divergence with the power delta, but the manipulation ribbon can produce equally as amazing results. So this first trade up here, if you look at the high here, then there's a lower high here. You'll see there is not a great deal of activity on the power delta. However, if you look at the manipulation ribbon, this basically calculates any manipulation that's happening in the markets, gives you a graphical output. I'll just zoom into that a little bit more. You can quite easily see there's a manipulation happening. This has formed a higher high. This has formed a lower high. We have the reversal print here. The first one actually took place right about opening time on Sunday when the markets open after the weekend. So I don't think anybody out there will be trading this. It's simply the wrong time to be taking a trade, and it's opened with a gap. So all that's happened is there's been a gap fill, and the reversal print has happened for a second time a few hours later when Tokyo is open. So if you're trading this session, you can get an alert. You get one alert when the reversal print begins to form, and then another alert when it actually breaks. You can also set alerts for when the liquidity is broken by setting a level alert. You then need to go onto your charts and look for any divergence. So here we have a clear and clean signal. We can then look for an entry point. In this case, we're using FVGs. Now, for those of you that don't know what an FVG is, it's a fair value gap. These blocks that are being painted, it's between the high of this candle and the low of this candle. So it's when there's a gap has been formed that hasn't actually been filled with price. It's known as a fair value gap. And that is what we're looking for our entry. So you can see just here, if you were to set your trade as a limit order, it's the way I like to do things. So you can also get an alert for when the FVG is formed, when it's been broken, tapped, when it's been all the way, when price has gone all the way back through it. There's a whole series of alerts you can set for FVGs. I then target the next level of liquidity. I'm placing my stop at the top of the candle that formed the FVG. That's the more aggressive stop. You can put it to the swing high, slightly safer, but less risk to reward. This is a 4, absolutely fine. Slightly more aggressive, you're looking at 6. So we do advise that you don't always take profit all the way down to the next liquidity level. If you're to target 2 to 1, say, you'd be out around here. 3 to 1, you'd be out here. This one we're targeting 6 to 1. So all the way down to the daily liquidity. And then what do we see at the bottom? So another trade I'd like to draw your attention to actually forms at the bottom. This time we have the liquidity sweep here on the daily. We have a divergence, this time with the power delta. The manipulation ribbon, as we can see, there is no divergence this time. There is an earlier divergence, but there's been no reversal print at that point. So you disregard that. You see the reversal print start. You get the warning here. It breaks here. Now you're looking for an upside trade. So we are looking for a fair value gap. There is actually a small one here. This time around, I'm going to place my stop at the swing. And I'm going to target all the way back up to the daily liquidity. It's a 4.61 trade. You could actually, if you wanted to, be a little more aggressive. And you could get anything from a 13 or 11 to 1. I'm not going to be too greedy this time. I'm going to go for the swing low, which is the natural point. Something else at this point I'd like to draw your attention to. You can see on the chart, there is a grey box here. Let me just pull that out of the way. There's a grey box here. That is recording the last 60 candles. So from this point backwards, it counts 60 candles. So for instance, if price were to come and sweep this, I would be happy to take this trade because the liquidity that was formed here has rested for more than 60 candles. This will follow price, and as price, we'll see in a second, as price moves, so does the background, and it gives you an instant readout of how long that liquidity has been resting, which is a very nice little tool. That is the fourth element of the 4-in-1 that I mentioned earlier, along with the liquidity levels, the reversal print, and the FVG and IFVG finder and alert. Okay, right, let's play this trade out, see where we get to. We've got the reversal print starting to come in, and just at that point, that's where we hit our take profit. Yep, okay, that's correct. That's your entry point. It's a 4.61. Entering off this fair value gap, it's a very thin one. They still count though. I will take them even if they're that thin. Some people won't. Some people might wait for a larger one, in which case risk to reward is 2.39. In this case, taking the first one since the swing, 4.61. Okay, now we've got this reversal print coming in. And what can we see is happening? We can already see that there is a divergence with the power delta. Yep, there we go. So I'm going to mark that on my charts. Up to the swing point. Here down to here. Reversal print is still printing. There's been no arrow. So let's sit and wait until the arrow prints. And as you can see, price is still climbing higher. So the reversal print knows it's not ready. It's not ready to make a break to the downside. Yep, still printing. Here we go. Right, we can see the divergence. It's a very long divergence. That's why we need to be patient, ladies and gentlemen. Because you don't want to be taking it too early. Also, you notice there's no fair value gap to the downside. Here, there has been one printed at the exact moment the reversal print came in as well. So that's a very good confluence. I'm going to set my stop loss at the swing. Let's see how this trade pans out. Take profit. we're going to put at the daily liquidity. It really is that simple. You can take trades like this on any time frame, on any instrument, and you'll see the exact same results. The reversal print, the power delta divergence. This really is the best reversal trading system available on TradingView. And there we go. It's come all the way down. And our third trade in sequence, 4.49, 4.52. And then what happens, we can see the reversal print coming in, and we might get a reversal signal. Yep, there we go. And again, another trade to the upside. So just from these few bars, we've had a 4.52, we've had a 4.61, and we've had a 5.93. All that was in the space, this is the hourly chart, was in the space of around 2 weeks. So not bad going. If you're on the 5-minute, you'll expect to see in one trading session 1 or 2 trades. If you're on the 1-minute, you'll see 4 or 5 trades. If you're looking at multiple pairs and you've got your alerts set up, then yeah, you'll be getting a decent amount of trades day in, day out. Also for swing traders, works very well on the daily, works on crypto, works on stocks, options, you name it, it works. Okay, that's it for now. Many thanks, and hope to see you as a happy customer in the future.